just like silver, we're probably closer to a bottom than a top.
Now, when it comes to, I guess, investing in the mining stocks, what are some of the advantages over the physical metal?
Leverage, but leverage cuts both ways. They're much more volatile, and then there's a lot of additional risks too. Jurisdictional risk. These greedy governments are the mining stock, or the miners going to get their permits they need? That marked the peak of that 40-year bull market. This blow off top, depending on how you look at it. Blow off. Kind of bottom in yields, but in the price of bonds themselves. And where are we right now? We're poking our head right at this 40-year resistance line. And RSI is extremely overbought. It hasn't been this overbought going back decades. So I think what's probably likely here, like I was saying, this rate hike cycle is pretty much priced in. And I'm looking for yields to pull back a little bit, although I think the trend is higher. We're due for a counter trend, pullback. And I think that's going to, coincide with a bounce in the metals and commodities here over the next few weeks to couple months.
So that's very interesting. I mean, we have seen such a pullback in precious metals, but you're saying in the weeks and months ahead, we could see a bounce back.
Yeah, exactly. And now I can pivot over to that chart for gold. And this is what we were talking about before, higher highs and higher lows. You've also got the handle portion of that massive cup and handle pattern that most people are familiar with by now. There's a big cup pattern that started in 2011, and this is a textbook pattern. And what you see right here is the handle portion of that cup and handle. And where do we bounce this week? Right here, right at the right edge of that handle pattern. So I think this support's going to hold. Initial support here is 1880, but below that, if you go to zero in on the daily chart, you can see that 200-day moving average right here, about 1835. And then there's 1780, which is that previous swing low. So those are the support levels I'm looking at. Right here at 1880, 200-day moving average 1830, and 1780. And that's happening in the confines of kind of a shorter-term triangle pattern that you can see on the chart right here. And that pattern should resolve no later than midsummer. So I could see us consolidating in here for up to a couple more months before my bias is to the upside, before an upside breakout.
Now, if people are looking to add to their position, would you say now is a good time, or that we might want to, wait for a lower price?
I'm glad you asked that, because it's important to have an accumulation strategy. There's no one right strategy for everyone, but it's important to have one instead of, if you ask a lot of people, hey, what's your accumulation strategy? They don't have one. So like for physical metal, for me, I just dollar cost average every month. I'm not worried about the price. But when I'm looking to buy mining stocks, my strategy is to buy sharp pullbacks to key support levels and scale in with multiple purchases. And I think now is a fantastic time to do that. In fact, I just added to my own mining stock positions yesterday, and that was the first time I've added in quite a while, because we had pulled back to some nice support levels. And then, if you're short-term trading, that's probably not most of your audience, but that's where I like to kind of buy breakouts from technical patterns. But that probably doesn't apply to most people.
I think that's so key to have that strategy, because then in that case, you're not just acting on emotion. You know what you're going to do and when you're going to do it.
Yeah, if you ask a lot of people, they'd say, yeah, I like to buy pullbacks to support. But what happens is they buy when things are running away to the upside, which is not, if you have a strategy, you've written it down, it'll keep you from making those kind of mistakes. Where do most people, retail investors, buy? Up here in the last couple months here. That's when everyone wanted to add. Down here, where we were like yesterday and the day before, how many people are looking to add to their mining stocks? I know there's some, but typically retail likes to buy it near the top, which is unfortunate.
Now, when it comes to silver, what are the key support levels there? Yeah,
silver, I mean, the chart, it's just ugly. You can see this sideways range going back to 2020, that peak we had. We're just chopping right sideways, right in the middle of that range. I was encouraged here by this little arc pattern that had formed. And I thought we're going to run up to closer to 28.50 to 30 before this pullback. I was wrong on that. But, last week, the first warning signal was this big bearish engulfing candle on the weekly chart. That's just an ugly looking candlestick. So that kind of signaled we might see some more weakness this week. And sure enough, we've seen that. One thing that might be a little bit encouraging is we're seeing open interest kind of flooding out of silver and gold. And that indicates the bankers are covering their shorts at a very rapid pace. So I think we're probably much closer to a bottom than a top here. But, a little bit more weakness wouldn't surprise me in silver. And just like gold, silver is forming its own little triangle pattern here. This is a smaller pattern. It's below its 200-day moving average, but I can see it kind of chopping sideways in here. And just like gold, this pattern will resolve by midsummer. Same thing for this triangle pattern. And my bias is to the upside. And I'm not a perma-bull. If there were reasons to suggest it was going to go lower, I would tell you what I think. But I think I'm looking up in silver, and I think we're much closer to a low than a top.
When it comes to the kind of buying the dip, then this might be a good time for people to scale more into silver?
Yes, absolutely. Same comments apply to gold that I made about the dollar cost averaging. But yeah, if you're looking to buy physical, I think this is a fantastic time. And junior silver mining stocks are also extremely undervalued relative to even junior silver miners are the most undervalued component of the whole precious metals complex. And I think they're presenting the most attractive risk reward opportunity right now, the junior silver miners.
If we can move to the mining stocks in particular, the large ETFs, what is your take on them right now?
Sure. And by the way, since I mentioned it, here's that chart comparing SILJ, the junior silver mining ETF, to GDX. And you can see where we are. This is actually a bullish descending wedge pattern that's forming in that ratio. And once you break out to the upside, you typically get a pretty sharp move. But just if we go back to where we were in 2016 on this ratio, that would mean junior silver miners outperform GDX, the senior gold miners, by a factor of 2. And I think they'll probably outperform by even a wider margin over the next handful of years. But GDX, here's the chart for GDX. I talked about that bearish engulfing candle on silver. Well, GDX had its own last week. And I mean, that's just an ugly, ugly candlestick on big volume. We came down, tested the $35 support. So that's encouraging that we're holding right above that $35 level. And I don't have a chart for it, but the 200-day moving average is not far below either. So you got a nice confluence of support there. Could we go back, pull back just a little bit more in GDX? Certainly, but I think just like silver, we're probably closer to a bottom than a top.
Now, when it comes to, I guess, investing in the mining stocks, what are some of the advantages over the physical metal?
Leverage, but leverage cuts both ways. They're much more volatile, and then there's a lot of additional risks too. Jurisdictional risk. These greedy governments are the mining stock, are the miners going to get their permits they need? Are their drill results going to be as good as the market expects? So there's all kinds of risk, but there's tremendous upside too in these mining stocks. I do think silver is probably going to go to 300 in the next handful of years over the longer term. But I think if you're looking for like 5 baggers and 10 baggers, that's where you find that kind of leverage in the junior silver mining stocks.
No, it is difficult though to pick the right miners, right? So what kind of leverage do the ETFs give? So
here's my kind of going from least risky way to play the mining stocks down to the most risky. And this is really important to know if you're new. I think a lot of people may know these things, but I look at ETFs as kind of like the least risky way to play because you get a diversified basket. So if a couple of mining stocks fail, they go to zero, well, you've got a broad diversification. The next safest way, and this is my favorite way, is the royalty and streaming companies, the Franco-Nevadas, the Wheaton Precious Metals, the Sandstorm Golds. There's a handful of them. I think they offer the second most favorable risk-reward ratio. And then, of course, you got senior producers, junior producers, explorers, and developers. And one thing I see with newer investors is they're always drawn to those explorers and developers. And there's nothing wrong with that at all. But as long as you understand the risks associated with it and you've done a proper cost-benefit analysis, does it fit your risk profile? For me, I like to have about 20% of my portfolio in those explorers and developers. And that's where you have your 5 and 10 and even 20 bagger potential. But there's also more risk.
And when you're talking about 20%, is that for the precious metal component of your portfolio?
Yes, I'm glad you asked that because a lot of people just make the assumption like, hey, you're all in on precious metals mining stocks. There's nothing wrong with that as long as you've, again, counted the cost. So I think of your whole financial plan as a pie, and then you decide how much of that pie you want to be in these sectors. And then of that component that you've decided to put towards precious metals mining stocks, decide what percentage of that you want to be in, top tier royalty plays, senior producers, junior producers, explorers, and developers. And for me, the portion of my overall financial pie that I've put into precious metals mining stocks, of that portion, I put 20% in explorers and developers.